I would now request Rotarian Anand Dalal to introduce our guest speaker, Mr. Amit Chandra.
Amit is a friend of our clubs, having come several times as a speaker and also been part of our fundraising program. And so really he doesn't need an introduction, but here it is. Amit is currently the chairperson and was the founder of the Bain India Capital Office. And he's also part of their Asia Pac leadership team. Prior to joining Bain, he was with DSP Merrill Lynch for several years, where he retired as the board member and as a managing director of DSP Merrill Lynch. And prior to doing his MBA, he was also with L&T India. Over the years, Amit has served on several boards, both for profit and both non-profit, including Tata Sons, Genpact, Ashoka University, Piramal Enterprises, MCure Pharma, Akansha Foundation, Tata Investments, and Give India. Amit and his wife Archana, who was our speaker very recently, have received the Asia Heroes of Philanthropy Award in 2016. Amit received his MBA from Boston College, and as Bimal said, he was roommates with Bimal. And Amit was awarded the Distinguished Alumni in 2007. In the same year, World Economic Forum also awarded him with a Young Global Leader recognition. Amit received his undergrad degree from VJTI Mumbai. In conversation with Amit will be our Gautam Trivedi. Gautam is the co-founder and managing partner of Bain Capital, a fund that invests both in the private and public space and has now an AUM of about $650 million. Gautam, over to you.
Thank you, Anand, for the introduction. Amit, welcome aboard, and happy to host you a second time this year. I think the question that everybody does have, and again, this is more related to the immediate equity markets, which you're not directly with respect to investing in, but I'm sure a lot of your companies have IPO'd, and as a result, wanted to get your initial thoughts on where we are with respect to the equity markets, and which in turn, of course, impacts the private markets.
Good afternoon, everyone. Thank you to the Rotary Club for inviting me here again. It's tough to follow my wife at any occasion, especially as speaker. And it's a joy to be here amongst friends. Gautam, you have a much tougher job than me. Being an investor in these frothy markets is truly a challenge.
Yep.
And I think putting money to work in private markets is probably even more tougher than being in the public markets. But notwithstanding that, I would say money still seems to come in large amounts, and that's, I think, we have probably the US Fed to thank for that. We are in the middle of I think the greatest pump priming operation in world history. Never before has as much amount of capital being pumped in by central banks to respond to a major, health crisis, and we are seeing the results of that. I think valuations have indeed gone to record highs. The Sensex is trading. Sensex and Nifty are both trading well above their all-time median multiples. So it's not just absolute highs, but also in terms of multiples, they're well above highs. Of course, some of this, many people believe is justified because valuations are somewhat suppressed, given the sales growth for companies have been decimated for a few years now, and capacity utilization is still relatively low. But even if you adjust for that, I think it is still a relatively expensive market, and I think it does make it very, very difficult for many of us to deploy money.
Amit, on that note, question I have is what sectors do you still find value in, and what are the sectors that you guys are specifically looking at?
Yeah, I mean, our job is to put money to work. So we do obviously keep spending time looking for things to do. If you would have seen from the newspapers, we were very active trying to do one of the largest buyouts in Indian history till recent times.
Yeah.
And so, we do remain very active, still scouting for things to do on a bottoms-up basis. But I must say that the last 2 or 3 years have been amongst the most difficult years to put money to work in this market. I would say at this point of time, and it's no different from past mega cycles. I've been in the markets now for 3 decades. In times like these, when things really get rich, the best opportunity generally lies in things which people have least belief in.
Sure.
And I personally believe that the best opportunity at this point of time is in things like financials, because people still feel the banks are still beaten down, NBFCs are beaten down. Industrial companies are still, are still suffering because the capex cycle is still not fully, recovered. And I think there's still opportunity to, go in and play that selectively. And so I think things where people still have some degree of disbelief is where I think there is some opportunity. There are some segments of the market which are more linked to the global economy, and things have been a little less frothy there. But even there, rapidly in the last few months, things have caught up quite rapidly, and opportunity has unfortunately gone ahead of us. But I think at this point of time, things are, you can still go in there, but the return that you can make is narrowing very, very rapidly.
Sure. I guess the one sector that I'm sure a lot of people here have questions for, and that's really making the headlines, is the Indian internet tech sector. And I don't mean software services. I mean the tech sector. You saw Zomato's listing, with a market cap of 1 lakh crores. And obviously many more to come. Paytm is next, Nykaa thereafter, and so forth. What do you make of that, first of all, in terms of valuation? And more importantly, we haven't seen you being very active, as in Bain Capital India, being very active in that space. What are your thoughts around that?
Yeah. Gautam, that's actually a very fascinating sector. I mean, the reason we are not very active on it is many of those companies are still, as you know, not profitable companies. And we typically invest in what we call late stage companies, companies with well-established, proven business models, some degree of cash flow in them. And so we basically shy away from these kind of companies. These companies have done remarkably well, and obviously they have great valuations, but they still don't have great cash flow in them. And so we've kind of stayed away from them. We obviously, people like us, we missed the boat in terms of investing, small amounts of money and making large returns, betting that these companies at some point of time in the distant future will turn profitable. But it's very difficult to crystal ball gaze and say that they will do so on the basis of cash flow. This is all at this point of time really happening on the basis of essentially revenue growth. There hasn't, as you know, company after company, there hasn't been translation of revenue to cash flow in pretty much all these companies. And so for folks like us, and indeed for most of our peers, we still make money the traditional way, based on solid fundamentals that we can analyze and put onto a spreadsheet. There is obviously a segment of the market which does it very differently. They have different metrics. They look at things like, revenue to, market cap and, other fancy metrics like customer multiples and stuff like that.
Sure.
It's like, some people speak Sanskrit and some people speak Hindi. And, you can understand some of the words, but you don't understand all of the words.
Yep.
And, not to say that one's a better language than the other.
Yeah.
Sorry.
Sorry, I'm going to mute everyone. If the speakers can unmute themselves again.
Yeah, sure.
I'll just mute. There we are.
Yeah. So it's just that, we don't understand that language. But what is remarkable is that, for folks like us, we now have to really, when we invest, keep an eye out for many of these companies because they obviously disrupt the operations of companies that we invest in.
Yeah.
And so you got to be very, very careful of how that happens. And if any of these disruptors are in your ecosystem, then you gotta factor that in as to how they're going to take share, how they're going to impact profitability of companies in the ecosystem that you operate in. And so even if you don't invest in them, you got to really understand them.
Yep.
And that's very, very important.
That leads me to my next question, which is with respect to China, and the comparison between India and China is inevitable. Of course, China is significantly bigger than India, but the fact is, given the recent crackdown by the Chinese government on tech companies, and that came totally unexpected, global private equity and venture capital funds have actually lost, at least on paper, billions of dollars of valuation. Do you think that will change and move the focus towards India? And I don't mean just from a tech perspective, but overall, the fact that the Chinese government came down suddenly so heavily on the tech companies and destroyed, literally, the number I have is over $1 trillion of value for both the listed and unlisted companies. Do you think you will see more money as a result coming into India?
Yeah, Gautam, that's a great question. I think yes and no. We are unfortunately we are a dwarf compared to the Chinese tech ecosystem. Yep. They are miles ahead of us. That is the reality. And they're ahead of us on technology in terms of ecosystem, in terms of capital access and everything. And so what has happened is there is probably a blip, and it is obviously everything that happens in China happens for a reason. And they're obviously doing all of this because they want to exercise much greater control over their players, and so they're doing it for a very, very good reason. It will obviously have some ramifications, but does it cause a opportunity, and will there be a complete pivot towards India? I think it will create an opportunity for us, but will it create a pivot towards India? I don't think it will create a pivot towards India. It will definitely create an opportunity for us, and we should seize that opportunity and make the most of it. But I think, it's one of those things that if we don't seize the opportunity, I think it will disappear very quickly. But, will this mean that, people will just stop investing in China and start investing in here? No, because I think, that's just such a huge ecosystem that I don't think, people can ignore the opportunity there. I would, I think we should make the most of what's happening there. I sincerely hope that we do. But I think what's happening there is, China is a massive ecosystem.
No, absolutely. Amit, the other question that's come up from a PE investing perspective, and some of the newer industries that are now coming up, led by the production-linked incentive scheme, the PLI scheme. This morning, you must have read what was announced yesterday with respect to asset monetizations. What do you make of both of these? And do you think this is something which global PE funds, sovereign wealth funds would be interested in investing?
Yeah. I think the PLI scheme is really a great scheme. I think it's come late, but I think it's highly welcome, and I wish it would have come earlier. It'll create a lot of opportunity in a lot of areas, and importantly, I think when one sees it work in a few areas, I don't know whether it'll work in all 14 areas, but even if it works in, let's say, half of them, I think importantly it'll create templates for replication in other areas, and which is what we need. We need examples of change that can easily be replicated in other areas. So I think it is wonderful that the PLI scheme has come in. Asset monetization, I think, as we know, the devil in India is always in the details. So very early to say, what's going to come out in the detail. Gautam, you and I have seen the disinvestment announcements, budget after budget for the last 20 budgets.
Easily,
and,
yes.
The conversion ratio of disinvestments has been abysmal. Will this actually be yet another example of that? I don't know. I mean, one always hopes that the government of India, realizes a lot more from the assets that it has, whether it be through complete disinvestment or it be through these kind of measures that they've announced. One only hopes, because remember, the government of India is the largest owner of assets in this country.
Yeah.
And which means all of us around this call effectively, earn virtually nothing for all the assets that we have paid for.
Yeah.
And versus actually on the liability side, because all of us have indebtedness via the government's borrowing program, we actually have negative carry. So it makes so much sense for the government of India to do exactly what they announced yesterday.
Yeah.
It makes huge sense, right? And so I think they need to be doing this, because every year that they don't do this, it's a lost opportunity.
Absolutely. The other question which a lot of people have been pondering, and you've seen with respect to the impact of COVID, work from home, people coming into offices maybe twice a week. Some people actually physically working remotely and going to places where they never thought they would. People thought they would retire in a Ooty, retire in a Dehradun, but now they're able to work from there. How do you think that's impacting the overall ecosystem? And are you right now at home, or are you somewhere in an exotic location?
No, I just got back from Dehradun yesterday.
So I guess you were scouting for options from.
No, I wasn't. No, I actually have both. I have both my offices open, and I do go into office, reasonably. No, I do believe that with reasonably safe protocol, I think we can have our offices open, and I think there is absolutely no substitute to being able to have some degree of interface with our team members. Because I think otherwise, this whole work from home concept is highly overrated. I think we will ultimately have to go to somewhat of a hybrid model where we can work remotely to some extent and get some efficiency to that, to a limited extent, and there is some merit to it. But I think otherwise, we will have culturally bereft organizations, very weak team dynamics, and in customer-centric businesses, we'll simply not be able to look customers in the eye and have good customer centricity if we aren't able to travel, meet our colleagues, etc. So I do believe that it is we do need to be able to get to our offices. maybe a lot of the travel earlier was not unnecessary. And I do believe some of the, some of the need to show up at the office to the full extent was unnecessary. Maybe we need to get to the office, 3 times or 4 times a week, and we need to travel, 60% of what we used to earlier. But I do believe we need to travel for leisure. I've done 7 trips since the pandemic started. And maybe I'm an anomaly, but I believe it's important to travel, and both for work and for leisure, and get to the office at least a few times in the week.
Absolutely.
But not at the expense of safe protocols. I have very well established protocols, both whether it's vaccination or testing.
Yeah, absolutely. Amit, what are your thoughts on the overall global private equity funds looking at India? I mean, where do they see India positioned now vis-a-vis other emerging markets? And I don't mean just China, of course, but even other emerging markets, whether it's Latin America, whether it's other parts of Asia. Are you seeing India rank in the top 3 right now in terms of attention, in terms of investment money flowing in?
I wouldn't say top 3 or something. India has always been an important market. It has been for the last 10 years. It steadily has climbed up. And India, for most funds, at least the top funds, is basically between 5 and 15% of assets if you look at total assets. Which makes it, a reasonably important market. And importantly, that number is growing at, some number in the close to 10% range, which relative to total assets under management is higher than average. And so that makes it an important market for anyone. And certainly within Asia, it's amongst the top 3 markets. Japan, China, and India are the top 3 markets for anyone. But, I think, look, Europe is a very big part of everybody's portfolio, and US is obviously the biggest part. So if you look at, US, Europe, and then the 3 big markets in Asia, I mean, India is obviously amongst the top 5 or 6 markets for anyone. The good news over the last, I would say 10 years is, prior to 2008, India didn't provide returns. I think post 2008, private markets in India have provided returns. And I think that's the good story, that, at least the good investors, the, well-established investors in India all provide double-digit returns. And I think that, and not just provide returns, but I think give capital back to investors.
Yeah. Exactly.
Earlier on, I think it was a little bit like Hotel California. You could check out anytime. You never leave. I think that has changed. So.
No, you're right. I think it's not just returns. It's been superior dollar returns. In fact, I remember last year attending a lunch with the chairman of Blackstone globally, Stephen Schwarzman in Mumbai, and he said India by far has been their best market, and includes the United States. So
for Blackstone, I think they've been a phenomenal story. I think. For them, India is the best market for them globally. For us, Japan is our best market globally. I wish we would have emulated our Japanese returns. We are not as good as that. So.
Sure. No, absolutely. I guess I have a couple of more questions, but the one that I do want to get your views on is with respect to disruptive technologies. And you're seeing solar, wind changing now, increasingly the dynamics, given the fact that costs have fallen. Dynamics of the thermal coal business, thermal energy business, replicating and substituting that with alternative energy sources, electric vehicles, and now hydrogen, again, being a big part of a lot of people's focus. What are your thoughts on these disruptive technologies?
Yeah. So, I'll make 2 points. One from an investment perspective and one from a general perspective. From an investment perspective, it's not necessarily a theme we have chosen to focus on for 2 reasons. One is it's focused on by 2 sets of investors. One is the early stage investors, because often these are, Gautam, things that the VC guys tend to focus on. And post the VC guys having focused on it, it actually lands up getting focused on by either the infrastructure guys or the green guys. And so folks like us don't land up actually focusing on them.
Yeah.
The exception is, in highly stable situations where, like in markets like Japan, we've actually done wind platforms. So we owned the third largest wind platform in Japan called JWD, but that was really an exception. It's very rare in markets like India or China or US, because these things, you rarely get an opportunity to earn like a 20-25% IRR, which is what private investors like us chase in assets like these. Now, the second point that I'll make is that it's actually very interesting. There is a lot of disruption happening in these spaces. I mean, the Prime Minister obviously talked a lot about hydrogen. That's one area. Even in wind, actually, it's now suddenly you're seeing a lot of interest, coming in with actually hydro turbines, which are deep sea. That's another interesting area. So we're actually seeing some fairly interesting developments that we are tracking. But we don't do this as I said, we don't track them as investors. We do track them as beneficiaries, as consumers and stuff like that. But there's actually a fair amount of, because of climate change, I think these are going to be very, very interesting areas to track.
Is ESG, you think, is it a fad or it's here to stay? Because I'm seeing this increasingly with both venture capital, private equity funds adapting this, and also increasingly public market investors as well. So what do you make of ESG?
Yeah, ESG is actually a mega trend. It's if there's a single most important thing that folks want to focus on in investing, it's actually ESG. Whether in the public markets or in the private markets, it's one thing you want to really, really pay a lot of interest to. If you're in the public markets, you want to pay interest to it because if you land up investing in a company which isn't paying interest to it, you could see valuations crash and burn. On the other hand, a company that's paying interest to it and is doing a good job could see a premium to it over the longer term. And just like how Infosys made a big deal out of it and started trading at a premium in the initial years. HDFC was again a good example of that. But this is a mega trend. The leading pension funds of the world, etc., are going to start have ultimately driving indices and putting metrics to ESG. And ultimately, you will see money getting pulled out from companies who do crazy things, who have more pollution or have less women employed, or have bad supply chains. And you will start seeing more and more of this. What used to be regarded as activist behavior will start becoming mainstream. And so this is the single most important thing that investors should want to focus on. Even when, as private investors now, when we invest, we have teams that think very hard about what the ESG characteristics of a company are, because we know when we have to sell it 3 or 5 years from now, this is going to be a very critical part of the selling pitch.
Amazing. I have one final question before we open it up to the members of Rotary. And the question is, and I've asked you this in the past, but I wanted to get your view again, is that we've noticed that over the last 3 to 4 years, global private equity funds are increasingly coming and buying out the ownership, as in the promoter stakes in listed mid-cap companies. What do you think of this trend? And more importantly, why do you think this is happening?
Yeah. So Gautam, I remember we've spoken about this 3, 4, 5 years ago, and I'm not surprised with the trend. I think I used to be a banker now 15 years ago, and even 15 years ago we used to talk about that this will happen at some point of time, and we were a little early when we were thinking about this. At that time, I think it was a little bit of a slur to go and talk to a Indian family and talk about selling.
Yeah.
The ones who sold were, we used to call them progressive, but often they used to be offended when we used to go and make pitches to them. But I think today it's almost, the whole clock has turned, 360 degrees. It's becoming fashionable to sell. In those days, many of them used to say, promoter community mein kya bolenge log agar hum beke. And so they sold more as a last resort. Today, I think many families are selling because the next generation is actually very clear that humko nahi karna hai, So they are actually, two things have happened. One is the next generation is so clear about their preferences. We want to do something else. We want to run an art gallery. We want to run a restaurant. We want to go to Dubai and run a family office.
Yes.
We want to just, travel the world. So the next generation is clear about the preference. In some cases, the founding family father or mother is so clear. Next generation is not competent to do what I did.
Exactly.
And unlike in the past where they forced the children to take on the business irrespective of their competency. Now they are not thrusting the business on incompetent, successors. And so you're seeing actually, and that was actually, we saw in many cases, I remember in 10, 15 years ago, businesses actually getting, decimated by incompetent successors. Now, actually, people are saying, you know what, I'll just sell the business, give people the cash or whatever, and then we can move it on. So you're now seeing a lot more businesses changing hands with rapid succession. So that is one big part of the story. That's why there's a big spurt in suddenly a lot more dialogues where people are saying, let's move these businesses. In many cases, the children telling the parents, let's sell it. In some cases, parents telling the children, I'm going to sell it. So that's one reason why there's been a big spurt in buyout activity in the last 5 years. The reason why the buyouts have happened from promoter to PE and not from promoter to strategic is two. One is, in the last 5-6 years, global strategics have actually, in many cases, disappeared. So strategics have started focusing a little bit more on their backyards. In many cases, after global financial crisis, many cases the strategics said we are busy in our home countries. They got, they got busy basically solving their own problems. Private equity, on the other hand, just mushroomed all over the world, right? Markets like India, China, Japan, Europe, and so every major country of the world, you had at least 10, strong private equity players. Right? And these private equity players built large teams. And so they had the confidence that they could basically go and buy in sectors of their choices and operate these companies. Right? And so they were able to compete with many of the strategic players and build assets and operate them. After you had seen a few transactions happen and those transactions went well, one thing has basically led to another. And that's the reason why you've seen actually a proliferation of these deals. As you know, a lot of these deals have done really well, right? Promoters actually in many cases thought, ye khareed ke, will this person be able to do a good job, as good a job as me? But we know many of these cases, the companies have actually done remarkably well under the private equity ownership. Sales have grown faster, margins have expanded. Companies have, in fact, in many cases, the value has doubled, tripled. And so, and of course, the PE guys have looked at each other and said, oh, you did well with this company. I can go and bid for this other one in the same sector. And so I think that has been the reason why a lot more capital has come in the last 5 years.
No, great. Thank you so much. I can hand it back to Anand or Shahnaz. Our president will take it forward in terms of the Q&A.
Thank you so much, Amit. Thank you. Extremely interesting, especially the last part. And thank you, Gautam. I think we will start with the questions. I hope you can take a few questions.
Sure. Sure.
Mudit,
Yes.
you always have the
Yes.
first question.
Thank you, Amit, for your talk. I have two quick ones. One is you said you rely on cash flows to evaluate companies. Could you throw insight into startups like Zomato, who raised such a huge amount, and their cash flows would be very difficult to predict? And secondly, while India may have a big market size, but the quality of that market size leaves a lot to be desired. Take, for example, the recent Kane Energy issue and so many other the telecom companies being denied over 36,000 ITC credits and all. So would you comment on these two? Thank you so much.
Hi, Mudit. Yeah, as I said on the Zomato thing, I'm not really competent to comment on that. It's a very different world, these consumer tech companies. You probably need to invite, one of the VC guys. I don't know if any of them are members of your club, but, those guys are much better positioned to comment on that. Those companies, as I was, answering Gautam, they trade on very different bases. They trade on basis of, future cash flows. In many cases, the future could be 4, 5, 6 years away. And, you can change on an Excel spreadsheet, 2 or 3 variables by, a small amount, and that answer can change massively. And so it's very tough, but it's honestly for people like me to give you a good answer to the 2 questions on Zomato's valuation. And it was interesting, even Rakesh Jhunjhunwala made some comments on, on investing in companies like this. Even, he said the same thing, that he can't, explain the valuation of many of these companies. I'm in the same camp, no Rakesh, but I'm in the same camp. I find it very hard to be able to explain the valuation of these companies, and I've been wrong on that count, because many of these companies have just done phenomenally well. But just because they've done well, doesn't mean you can explain it. I think your point on policy framework is absolutely correct. Look, the Indian policy framework, I think even the government recognizes leaves a lot to be desired. And I think they themselves are therefore working on providing greater stability. I think the recent reversal of the retro tax was a very welcome move in that direction.
They were pushed to it, Amit, because
Yes,
they lost
absolutely.
the Kane case. Then they're trying to market it, and they made a disaster, if you ask me.
Absolutely, I agree with you. But I think before that, some of the stability in taxes, the move to faceless tax, etc. I think, sometimes governments need to be pushed to do certain things. And I think, look, we are a nation where we are a noisy and an imperfect democracy, but sometimes we only learn from our mistakes. And I think, my hope is that from some of these mistakes will emerge some positives. But you make a fair point. I think, there is a lot of imperfection in what we do, and there are lots of improvements which are needed.
Arun, I think you have the next question.
Hi, Amit. 2 questions. Everyone is talking about ESG, but all the large companies, Nike, garment manufacturers, shift their production from time to time to these countries like Bangladesh. And every 2-3 months, you have a huge fire, lots of people die, they make noises, but they don't really take any action. It's not that they are not known. They say, yeah, we'll check, we'll audit, but the investors, the companies keep on growing at the expense of child labor and that. So is there any remedy? And number 2, all the large financial institutions abroad, they actually work with corrupt dictators to siphon money out of the country. And the latest, of course, is in Malaysia, and where the government is prosecuting, and wisely they have filed a case in the US to get perhaps large things. But they normally, companies like Goldman Sachs, who provide the Treasury Secretary, Economic Secretary, get away with paying fines. Year after year, they pay fines ranging from $500 million to $1 billion. Would you like to comment on that?
Yeah, I think, no, I agree with you. I think my hope would be that with greater focus coming in on the ESG frameworks, the point that you made, other uncle, on examples like Bangladesh will turn the dice a little bit on, in favor of countries like India, because the fact is that actually we relatively have been a better regulated country. In fact, I think the problem here is that we have a little bit of excess regulation. And so, if we have frameworks like this, I think we stand actually a little bit of a better chance. So my hope is that frameworks like this will actually tilt, the entire scale a little bit in our favor. Look, I mean, the issue of fines and all that you raised, this is obviously a big issue. There have always been examples of big global institutions misusing their power. And I think, Gautam knows this, he's worked for big global institutions as well. All the global institutions, I think, they will always have some black sheep in them. It's true about small institutions, it's true about about big institutions as well. I don't think the example that you gave, for example, it's not something which is systemic. Sometimes what does happen is that the black sheep will, go out and misuse their power and position. And then the instance, and then because of that, they go out and pay a big price. I don't think these are situations where someone at the top actually is actively conniving with someone in the middle or in the bottom to encourage behavior of that sort. So the fact is that for the gains that they must have had, they must have paid a fine which was probably a multiple of the gain. This is not systemic behavior that typically pervades the organization in most of these cases.
I think, Renu, you have a quick question, and I'm not sure if Satyan will have time to take yours. So, Renu.
Hi, Amit.
Hi, Renu. How are
To
you?
see you here and hear you
Hi.
rather than the phone. And I'm happy that you take your holidays because, our business has to survive and thrive. I just wanted to ask you a very simple question, not to do with finance, but how do you manage the competitive world of finance and the world of philanthropy, which is so sensitive and empathetic so adeptly?
Thank you. At least there's one non-finance question.
Yeah, I've left that to the specialists. Yeah.
Yeah. Renu, I would actually, I would not be able to work in the world of finance if I was not working in the world of, in the social sector, to be honest with you. I think it's the social sector that at least enthuses me to get up and do what I do in the corporate world, because at least I have a sense of purpose and some reason to keep doing, keep making money. So it's, I think the sense of purpose comes from there. The fact is everyone needs a purpose, in their lives. And so that's my sense of purpose.
Thank you. Satyan, if you would like to ask your last question.
Thanks, Johnny. Amit, really insightful thoughts. It's a pleasure to hear you every time. I just was curious to know that what are your views on the cryptocurrency space? I mean, it's blowing up.
Kasim, again, I generally don't like to comment on things that I personally don't practice or follow. It is not an area I've ever traded in or even transacted in. So I've honestly relatively less knowledge about the space. It's also, as you know, an area that's not very well regulated, and so I do worry about I do worry about, till it comes under a reasonably well-regulated ambit, including how well it is tracked, how well you can have checks and balances on it. I worry whether people should have a reasonable amount, any reasonable exposure to it, or whether it should just be something which is experimental.
Thank you.
Thank you. Thank you. I request Honorary Secretary Akshay Batra to propose a vote of thanks.
Thank you, Mr. Chandra. Earn more to give more is the best message that I received today. And you're a perfect example of that. And thank you for being such a wonderful friend of the Rotary and such a wonderful friend of the Rotary Club of Bombay. All your contributions and help is greatly appreciated. And thank you for spending the afternoon with us. As a token of our appreciation, we will, on your behalf, plant 10 fruit-bearing trees at Nilmati Dandwal Gram Panchayat, Maharashtra. The said certificate will be forwarded to you shortly. Thank you very much once again.